Assalamualaikum and good afternoon everyone. Welcome back to our forum. I'm your moderator for today, Siti Nazifa, who would like to uncover about accounts, audits and reports. Together with me here today are the great ladies and women. Sitting next to me is Miss Mimi Rofifiana, an auditor from Jabatan Accountant Negara. How are you, Miss?
I'm fine, thank you. How about you?
I'm fine, thank you. Next to her is Ms. Nosafika Binti Supi, the head officer of Jabatan Auditor Negara. Sitting next to her is Ms. Putri Asha, a lecturer from Polytechnic Kuching. Also develop you, isn't it?
Yes, sure.
Yeah. Next, and the last guest is Ms. Fatinu Ardira, an auditor from Bank Negara, Malaysia. It's such a wonderful day to having you guys to be our guests for today. So, ladies and gentlemen, today's topic is about how the auditor being appointed in Malaysia. Next is about the rights of an auditor in the event of dismissal. Lastly is to discuss about statement of comprehensive income, statement of financial position, and consolidated account. First question, let us ask the first panel, Ms. Mimi Rofifiana. Ms. Mimi, could you explain to us on the appointment of an auditor in Malaysia?
Thank you, Ms. Siti Nazifa. Let me explain to you about the appointment of auditors in Malaysia. First, appointment by Board of Directors, and second, appointment at annual grant meeting. First, appointment by Board of Directors, which are every company must appoint an auditor for the main purpose of auditing its accounts and reporting to the members of the company. Next, the directors of a company may appoint a person or persons to be the auditor or auditors of the company at any time before the first annual general meeting. If the directors do not so appoint, the company's general meeting may do so. And last, the first auditor or auditors of the company may hold office until the conclusion of the first annual general meeting. Appointment at annual general meeting, which are in practice the directors of a public company choose the auditor, whose appointment is then approved or rejected by members at the next annual general meeting after the appointment. Second, when the public company is formed, the directors appoint an auditor who holds office until the conclusion of the first annual general meeting. Next, the shareholders then appoint the auditor at the annual general meeting. Fourth, the auditor holds office until they retire or cease to hold office in accordance with the Companies Act. And last, if a vacancy occurs, the directors appoint a replacement who holds office until the next annual general meeting when the appointment is put to shareholders.
Yeah, I got it. Thank you, Miss Mimi. But first, I'm pretty sure ladies and gentlemen out there don't know what is auditor and audit. So let me ask Miss Safika, what is audit and what is auditor?
What a great question to be asked, Miss. For your information, audit is examination or inspection of various books of accounts by an auditor, followed by the physical checkings of inventory to make sure that all departments are following the documented system of recording transactions. It is done to ascertain the accuracy of financial statement provided by organization. Audit also can be done internally by employees or heads of a particular department and externally by an outside firm of the independent auditors. The idea is to check or verify the accounts by an independent authority to ensure that all books of account are done in a fair manner and there is no misrepresentation or fraud that is being conducted.
Audits at the request of banks, investors, and other key stakeholders.
Their goal? To assure investors and other stakeholders that their cash flows, balance sheets, and profit and loss statements aren't materially misstated.
Firms like KPMG are often hired to perform these audits because they can provide an independent review of how a company operates.
And whether public or private, companies that go through an audit have the opportunity to gain valuable insight into how their business is performing.
So that's why companies perform audits. But what is an audit engagement like?
The word audit means to evaluate. So you could say auditors are the ones who evaluate where money's coming from, where it's going, and what it's doing each step of the way.
Accounts receivables, vendors fees, acquisitions, operating expenses, there are a lot of channels that money can flow through. And the bigger the organization, the more accounts there are to follow.
Which is why a career in audit can be so dynamic, especially in this global economy. Now, take a typical audit team, say for a multi-billion-dollar company. Now, to serve a client like this, there may be multiple partners working in multiple locations around the world. There may be managers, senior associates, and associates working in multiple time zones. There may even be specialists from tax or advisory practice offering their expertise on everything from tax compliance to IT controls testing.
Senior members provide leadership and direction, but there's a fair amount of autonomy, so each team member should be capable of self-management.
Of course, communication skills are essential, but in order to really excel at being an auditor, you need to be able to think critically, to understand what business decisions drive the transactions you're auditing.
Why does this transaction benefit the company?
And how does it fit in the company's strategy? Auditors who understand motivations for each transaction bring the right level of professional skepticism to the project, which is important because it's our job to look at the financial statements and see what companies say and verify that it's correct. Say and verify that it's correct.
Or not.
An audit engagement can take anywhere from a few months to a full year, depending on the size of the client and the complexity of the project.
Unlike advisory, where most of our clients are engaged on a project-by-project basis, most of our audit clients are annuity clients, meaning we work with them year after year.
In fact, we spend so much time at our client sites that some of
All
us
the
even set
public
up
listed
permanent
firms
workstations
have
at
to
their
get their
While we're
accounts
there, we
audited
spend a
by
lot of
an
time poring over their
independent
documents
auditor
and
before they declare
drinking their
their
coffee.
result for any
We compare the documents the company uses in their day-to-day operations against what they've recorded in their financial statements.
For example, we might take the receivables a company plans to report and compare them with actual orders that customers have placed.
We may also contact vendors to ensure that the numbers listed in the purchase orders are accurate. Hi. Yeah, can we go ahead and send confirms to the vendor?
We then take that information and compare it with the information companies are required to report in their SEC filing. And then we state our opinion as to the accuracy of those statements in our audit report.
I'm not gonna lie, audit can be hectic.
We're working in a real business environment, which is always changing.
A major contract could be revoked
Or won.
by our client, meaning now there's a new transaction to audit.
Or our client could purchase another company, requiring us to do an audit of that company and its assets. Or a subsidiary could go bankrupt, requiring us to evaluate its vitality to the parent company.
Now, changes like this, they can occur at any time and have a profound impact on work that we've already done.
But that's the real world, and it's one of the great advantages of working in audit.
No other practice gives such an intimate view of how business works.
As an auditor, you see why companies make the decisions they make and the financial impact that has across the organization. You also see what companies gain from the services and accounting
Next,
firm
I would
offers.
like to explain
After
about
all,
auditor.
audit is
An
not done
auditor is
just
a
to meet
person
investor or
of a firm
SEC
appointed
requirements.
by the
Many
company
companies use
to
their audit
execute
findings
an
as a
audit.
basis to
To
make
act an
strategic plans for their
auditor,
future.
a person
As
should
such,
be
an auditor
certified
provides
by
one of
the
most important
regulatory
business functions.
authority of
They verify
accounting
whether the
and
results a
auditing
company's
or
reporting
possess
are
certain
correct, while ensuring
specified
the obligations they've made
qualifications.
to stakeholders are being honored. And that's kind of
Generally, to act as an external auditor of the company, a person should have a certified apprentice from the regulator authority.
Thank you, Miss. What a great explanation, everyone. I'm pretty sure everyone will understand what she's saying. Move on to the next great ladies. Miss Putri Asha, a very well-known lecturer in the Polytechnic. I'm pretty sure you could explain to us about the rights of an auditor in the event of dismissal.
Thank you, Ms. Nazifa. I will focus on the rights of an auditor in the event of dismissal. Firstly, an auditor may be removed during his term of office by an ordinary resolution resolution of the company at the general meeting. Secondly, it is necessary to accommodate the case where an existing auditor has become obviously unsuitable to continue in office. Other than that, special notice must be given of such resolution. When a special notice given to remove an auditor, first, the company must forthwith send a copy of the special notice to the auditor concerned and to the registrar. Besides, the auditor may within 7 days after the receipt by him of the copy of the special notice make representation in writing to the company and request that prior to the meeting at which the resolution is to be considered, a copy of the company to every members of the company to whom notice of the meeting is sent. Thank you, Ms. Nazifa.
Wow, okay, thank you, Ms. Asha. Okay, now we're going to our last panel, Ms. Fatin Nur Atira. I bet you have been waiting to be asked questions. So, Ms. Fatin, can you please tell us in more details about the statement of comprehensive income?
The statement of comprehensive income, previously known as profit and loss account. Profit and loss account is envisaged by the Act include an income and expenditure account, revenue account, or any other account showing the result of the business of a corporation for a period. The statement of financial position, previously known as balance sheet. Balance sheet of a company must give a true and fair view of the state of affairs of the company as at the end of the period to which it relates. Lastly, consolidated account. A consolidated profit and loss account and a consolidated balance sheet of a holding company and its subsidiary companies must be made out. The main purpose of preparing the relevant consolidated account is to ensure that members of and for the matter person dealing with a holding company are provided with full information as to the profit and loss and the state of affairs of the company and its subsidiaries within the group. That's all.
Okay, thank you, Ms. Fatin. I'm pretty sure the ladies and gentlemen out there understand about how auditor being appointed in Malaysia, about rights of an auditor in the event of dismissal, and lastly is about statement of comprehensive income, statement of financial position, and consolidated account as said by Ms. Fatin Nur Atira. So, as you all know, auditors plays the main role in the company, in the country, and in the world. They have such a great responsibilities where they have to handle the trust among the client. Thank you very much, Ivy, to all the guests for willingly to be here with us today and sharing so much information. I hope with the information that has been given, the audience will understand about the work scope of an auditor. Alright, we're now nearing the end of our show. Thank you for coming and thank you for watching. Have a great day, everyone. Assalamualaikum.